10 o'clock on the dot. Good morning, everybody. And here we are, Friday, the day before Heritage Day. We're going to kick off in a little while. So I'm going to hold off on the official good mornings and welcomes. But for now, let's get you to just say hello in the chat. If you are here, let us know in the chat that you are here. Let's start saying hello. And Portia and I are going to do a couple of shout outs as you continue doing that. And so looking forward to you saying hello in the chat. We're going to kick off in about exactly 1 minute from now. So, Portia, how are you doing this morning?
I'm happy. Yeah, it's been a wonderful last 2 weeks because I was doing coaching with the guys. As much as we had a little bit of issues there with load shedding, but I really had so much fun. And I must say, we think we know these guys. Doing the coaching, I learned so much about them and fascinating businesses. Yeah.
Absolutely beautiful. Yeah. Tell me who you see there in the chat. Let's see who we have. I know first one in the room was Koliswa saying hi everyone. Neziswa was there from Eastern Cape. Who else do we have?
Lisibana from Marlborough. Hi Lisibana. I spoke to Lisibana this week.
Nice one.
Yeah, and then
Kobani's in the house. Kobani's in the house, and we've got Mr. Mokoka with us again. Okay, so I think without further delay, let's kick off because I know we've got quite a packed program this morning. And so, ladies and gentlemen, again, it is my absolute pleasure to welcome you and to kick off today's webinar number 5 of the Assisa Foundation's L+EARN BIZ program, brought to you by the Assisa Foundation. What an amazing program, especially curated for entrepreneurs like all of us on the webinar today. And again, if it is your first time, where have you been? I think by now we all feel like family because we've been together for such a long time already, 5 webinars in. And so my name is Darren August. It's my absolute privilege to be your host on today's webinar. And as usual, my esteemed and learned colleague, Portia, is in the house. Portia, do you want to say hello?
Okay, hi everybody. I'm so happy for this webinar 5. We're moving, guys. We're moving. Soon we'll be doing our pitchings, and yeah, I'm so excited, Darren.
Absolutely. Of course, we've got Mr. Mokoka with us again. Mr. Mokoka, do you want to wave and say hello? Such a privilege to always have you with us as well.
Hi, how are you? Nice to be here. Thank you.
Love the outfit. Okay, Portia, so let's get into it. This is where we're at. Can you believe it? We are about halfway through the program already. In fact, after today, we cross over the halfway mark. But so today we're talking financial calculations, margins, and we are going to be focusing on all of those numbers, all of the things that seem a little bit difficult. We're going to be talking about financial calculations and margins. That's where we are today, but we've still got 4 webinars left. We've got credit management, savings and investment, and mental health. That's coming on the 14th of October. Then in November, we're going to kick off with marketing, the business model canvas again, and we're going to be linking it to segments of financials. And then webinar 8 is going to be financial interpretations, compliance and funding requirements, and then business presentations in webinar 9. Don't forget, that's the big one. We are going to pitch. And of course, during your sessions, I know Portia is going to be focusing on preparing you for those sessions as well. Portia, any other announcements that you can think of that I've left out?
Yeah, I think you've touched at most of it, but we're still going to talk to them about coaching, how we're going to do the coaching, because there's a lot of us. We might just end up asking people to take a short video while they're pitching and send it to us so that we can send it to the judges and then the judges will look at it, because it will take a lot of time if we've got 40 something people to pitch on one day. So we'll talk about that later with the guys. Yeah.
Awesome stuff. So a quick one. We have an entrepreneur spotlight this week. And so we know that within the group, there's been so much interaction happening on the Facebook group and just so many people that have been really participating. So Portia, do you want to take us through who the entrepreneur spotlight for today is?
Yeah, amazing news. The person that just made me fascinated about the business was Neziswa. Neziswa is in farming. She's in the Eastern Cape in Libode. Sorry, Neziswa, because I didn't tell you about this, but I had to put you on the spotlight today. She started a new revenue stream selling earthworms to other farmers. So very exciting. I never even knew that you can sell earthworms, guys. So that's very exciting and fascinating. And then I want to also congratulate Eric. Eric received a contract to supply stationery to a school. And it's a very good one, so it's exciting. And the other person that I really enjoyed was Mutusi. Mutusi, great work. She's made a decision to run her business formally because she started her business like a hobby. It was a hobby. She saw people talking about farming, going around her area, teaching people about farming, and she jumped into it, and it's really doing well. And now she wants to really take this formally and start recording and register it as a business. And she's excited to grow it from a hobby to a business. Yeah. Those are the spotlight for today. Yeah.
Beautiful. Thank you so much, Portia. Well done to those entrepreneurs that we have put on the spotlight today. And that's really what this program is about. And that's why we encourage really engagement in the Facebook group, because you will be so surprised at just how your network can grow as well. Just from participating in this program, you're going to be able to find out what other people are doing, connect with other business owners. And really, that's what's going to help all of us benefit in the future. So well done to those entrepreneurs. I'd like to see some congratulations and just some hand claps and thumbs up in the chat for those 3 entrepreneurs that we've shone the spotlight on today. Let's keep going. All right, so today we are going to be touching on the importance of financial calculations in business. We're going to touch upon a couple of very important ones: markup, gross profit, net profit before, after tax. We're going to talk about break even, and we're going to talk about VAT as well. And then, as usual, we will have a quiz, so please do listen, please do take notes, please be engaged. And then later on, we will have a breakaway session, as we always do, and I will talk to you about how that will go. Remember that you will be allocated, you have already been allocated to breakaway rooms. And so when you get there, we'll have the group activities. We'll touch on that a little bit. We've got 2 special guests today. We've got Mr. Mike Mokoka with us again. And hasn't he just been absolutely amazing on this program? Such a wealth of wisdom and so much information that we can use and apply in our businesses. And then, of course, we have a brand new special guest I'm going to introduce a little bit later. So we'll keep her as a surprise. And then we'll wrap up with the assignment for this week. We'll talk about homework. And then, of course, we'll take our group picture in our Heritage Day outfits. And then we're out of here. But it's going to fly by, as it always does. Portia, over to you.
Yeah, so I just want to recap, just so to remind guys what we did last week. Just to recap on our last webinar, which was our webinar 4, we tackled financial recording and how you need to have an understanding of your finances, the accounting processes. We also looked at goal setting, and here we mentioned that in order for you to achieve your milestones in your business, you need to set goals. The last thing we also looked at was costing. Here we spoke to how you need to know how to price your products or services and still cover all your total cost of your business. So I know this was very interesting, and I know it opened people's eyes, because I even heard during the coaching, oh no, I need to stop estimating my costs. I need to work it out. I need to think about my direct and my indirect costs. So this was really exciting for me too. And then, as always, you know, guys, I always ask you the check-in questions. What do you know about gross profit? If we can maybe just talk to people, what is gross profit? If you can help me there, Darren.
Okay, so
what did you learn from this webinar module?
Let's have, if you would like to answer, please would you raise your hand, and we'll be able to see.
Yeah.
Hello, everyone. I think gross profit is sales less cost of sales. Yeah, sure, that's it.
All right, guys. So if you are a small business owner, all right, and you'd prefer to manage your business, you have to understand that it's very important that you understand cash flow, right? So you understand how the financial numbers have a direct effect on your profit and how to calculate margins on a product or service, and also know how to calculate break even. Very, very important. So we're going to be looking at the following calculations today. We're going to be talking about markup. We're going to be talking about gross profit. We're going to talk about net profit, and then we're going to talk about break even. And we're even going to talk about VAT. And I know for especially small business owners, that can be something that is a little bit scary, but we are here to get through it together today. I know when we think numbers and we see calculations, already our heads start turning, but it's very important as business owners that we know the numbers, all right? And so the equations will provide you with all of the visibility. Okay, so the equations will provide you with the figures that you need to understand the viability and health of your business and to make more informed business decisions. All right, and so let's get into the first one, which is markup. So markup is the selling price of our product, and we can work it out as selling price is equal to the cost price plus markup, all right?
Yeah. So the cost price is the amount of money that you use to actually buy that product or to make that product. Sometimes you're making products, you're not buying them. So if you buy something for 100 Rand, obviously you're not going to sell it for 100 Rand. You're going to retail it at with the markup on it. So the markup is the amount that you put in on top of your cost price to get your selling price. So our markup per product is the difference between the cost of the product and the selling price of the product. So Darren, you can see, you can write it as markup equals to selling price minus cost price, or you can say cost price plus markup equals to selling price. So this is the amount you work out. You cannot just guess the amount or the percentage. As we said in the last session when we dealt with costing, remember we said you can't thumbs up the price. You first need to know your direct and indirect costs before you come up with that markup. Yeah. So maybe let's move to a practical example with the shoe business and calculate their markup. So in the case of our shoe business, for example, you'll purchase or manufacture a shoe for 100 Rand. So that will be the cost price, and sell it for 150, which will be the selling price. So in case of the markup will be 50 Rand. So what does it mean? It means the cost price is 100 Rand, and then we put in the markup of 50 Rand. Now our selling price is 150. So what was our markup percentage? 50%. But if we charge the shoe for 200 Rand, that markup would have been 100%. Yeah. So that's how you calculate your markup. And I think the only thing, that's different is businesses are different, Darren. So sometimes you'll find that the indirect costs are a lot for another business, and then for another business, it's probably just rent only or electricity only, and then that's what I'm saying. Maybe during the coaching sessions, if people are struggling with this, what we can do, we can deal with it. I know that I worked with somebody, we did the costing during the week because they were struggling with this markup thing. So definitely the businesses are different. So we are going to have to tackle it in a different way to make sure that you don't shortchange yourself or charge too low or too much, to your customers. So your markup percentage or ratio is calculated as the percentage of your cost price. So what if the cost of the shoe was 110? And you sold it a shoe for 185. So what would your markup be? So it will be 85 Rand. So you need to, it will be 75 Rand. I said the shoe was 110 there. Yeah. So Darren, maybe we can move to gross profit now. Yeah.
Okay. So next up, we're going to talk about gross profit. And so gross profit can be expressed either as a Rand value or as a percentage. And gross profit is the difference between sales and the cost of sales over a specific period. Okay, and so on the screen right now, you can see the definition there. So it's gross profit is sales minus cost of sales. Let's make it practical. Let's use the shoe example again, Portia.
Okay. So let's go to the shoe example. So what if we only sold one pair of shoes for the month of July? So our gross profit equals to sales minus cost of sales for the month of July is equals to 150 minus the 100 Rand, which was the cost price. Effectively, this is selling price minus cost price if only one product was sold. Can you see that for only one product sold in that period, the GP is the same as the markup? In August, we sold 10 pairs, and the gross profit was 1,500 minus 1,000 Rand. So your gross profit is 500 Rand, which is equals to sales minus cost of sales. Yeah.
Pretty straightforward, but if you do have any questions, please feel free to pop them in the chat and we will elaborate on it. In fact, I'm sure we will touch on it a little bit later during the question and answer session as well, and in the group activities. But then obviously after gross profit, the next one is net income or net profit, all right? And so net profit is essentially the gross profit plus any other income, all right? So for example, if there's interest, if there's rent received, and then we subtract all of the indirect costs, okay? So it's often necessary to first calculate the net profit before tax, since tax is then calculated on this amount, all right? And so let's explain it this way again, using the calculation. So Portia, do you want to take us through this one?
So it's net profit before tax is equals to our gross profit plus other income minus our indirect costs. So guys, these indirect costs are important. And I realized something, Darren, a lot of people, when they are calculating their gross profit, their net profit, I saw some people also on the budget where they don't put cost, but when you ask them, verbally. They say, I've got these costs, but they never subtracted. I don't know why. So guys, let's just know our direct and indirect costs in our businesses. I think this is one homework that you must do. Can you please just write, what are the costs that are directly involved to what you're doing? So if you're baking cakes and there's somebody who's helping you, those ingredients, the person who's helping you bake those cakes, the person who's maybe delivering that cake, those are your direct costs because they are linked to your product. And then the other cost would be your salary, because maybe you're not baking, but you are managing the business, and maybe your transport costs when you go and stock, so think about those things. Your phone calls when you call your clients, those are indirect costs. Your airtime, your Wi-Fi, those are all indirect costs. So you need to really make a list of these things so that every time when you do your books, you've got that in mind. Because also when you are costing or you're looking at your income and your expenses for the month, you are going to know that I've got indirect and indirect costs, and they are 1, 2, 3, 4. Because it seems like every time I talk to people, they just leave that out. So can we please just make sure, maybe make a list of our direct and indirect costs in our businesses, all right? And then also your salary, make it an indirect cost.
Portia, so maybe in the example of the shoe business, what are some indirect costs that would need to be factored in that particular business?
Yeah, obviously this guy goes to market and go buy these shoes, or makes, or maybe all the materials that are needed to make the shoe, those will be your direct costs. Remember, because he's gonna make the shoe, the threads, the machine that he's using, he needs to calculate it as direct cost. And if maybe there's a shoemaker, maybe who's helping him making the shoes, that person is directly involved. It's a direct cost. And then, but the transport to get to that market, it's an indirect cost. All right. Gotcha. He might eat when he's there. Yeah, he might eat while he's there. I think we're having a party next door. We're having a party next door. Yeah, so we're just gonna ask them to chill a bit. But yeah, so the indirect costs are those things that are not really connected to. They are connected because, but it's not to the labor, to making the shoe. It's other costs that are involved in your business, and you're gonna have them, like your phone. He's talking to clients, people are ordering, he's using his WhatsApp. So, that equals to money. We know that it's not for free. Budget for those things. So it always, again, if you know your direct and indirect costs, it goes back to the costing again, and the budgeting. So the budgeting, the costing, if you get that right, then you'll understand what is your gross profit, what is your net profit. So I think we need to start with the basics. And knowing the basics, our direct and indirect cost is very important. Yeah.
I think one thing that I've noticed a lot of, especially small businesses, do is an indirect cost that often doesn't get taken into account is something like packaging. And so you're selling these shoes, but you don't realize that box that you're packing it in, or that plastic bag that you're packing it in, also has a cost that needs to be factored in.
Yeah, and that's actually a direct. Yeah, that's actually a direct cost, because remember, it goes with the shoe will not go alone. It will be in that package. So that's also a direct cost, because it's you have to do it. It goes with the shoe. So it's a direct cost. It's involved in making the shoe and getting the shoe out there. So you could actually put that as a direct cost, so that why, if you do that, at least when you budget, you will never make a mistake and run out of things, because you first start with your stock. Your stock is very important. Then your indirect costs will come after. But I think when you're doing your budgeting, you would budget for that packaging, you would budget for the sole of the shoes, for the threads, for dye, if you have to dye the shoes, for rubber, all those things. Then you can budget under direct costs. Yeah.
All right. The next calculation is net profit after tax. Portia, take us through this one.
Net profit after tax is often just referred to as net profit, since this is your true net profit after all the deductions. So net profit ratio, it's net profit percentage, which is net profit divided by your sales times 100%. So I think what we're gonna do, Mike will explain to you, because he's a vet and tax specialist. He'll explain more about that when we get to his questions here.
Okay, then the next one is VAT, and VAT is something that we're all familiar with. VAT is value-added tax, in case we didn't know, and that can be expressed as a rand value or as a percentage. And currently, we know that VAT is at 15%, right? And so most retail prices will include VAT, and we call the amount including VAT, or you'll often see it will say VAT inclusive, all right? Yeah. If the amount excludes VAT, then we call it amount excluding VAT. VAT is calculated on the amount excluding VAT. And so it's VAT is amount excluding times by VAT percentage or VAT, and then that will equal the amount excluding VAT. Portia, do you want to give us the example of this one?
Yeah, I think I also wanted to say that I hear other people say, I'm going to claim or I'm going to charge my customers VAT, especially when you're supplying products. So you need to be careful. You need to register for VAT first, as a business to actually do that. Yeah. So, for example, if an item costs 450 rands, excluding VAT, then the VAT amount would be VAT equals to 450 rand times 15%. You see, so that VAT would be 67 rand 50. So that's how you calculate it. Or you can say VAT is equals to 450 times 0.15, and it will still give you 67 rand 50. So that would be your VAT. Yeah, and I wanted to say, Darren, something also that came up for me this week when I was talking to some entrepreneurs, is that, when you we're working on funding, all right, you say your startup cost, or maybe you want to apply for a loan or funding, you must always include tax, because you can be asking for $1 million, but then it might not be, you need to put tax on it, so that you've got enough money to pay your taxes while you are using that money. So it was just a very interesting concept that when you are working on your startup cost or when you're trying to grow your business, those are the things that you need to be thinking about. Well, okay, I'm asking for this money and I want this money to push me for 12 months. But because you didn't include these little other amounts that we're talking about, like tax and all that, then you'll find that money can only push you for 8 months, because most of it will just go to tax. Yeah. So that's what I just wanted to say I learned this week. Can move to break even.
Yeah.
Yeah. So break even point is calculated by dividing the fixed cost of production by the price per unit minus the variable cost of production. So break even, guys, I think we've spoken about it since we started, and we always say it's exciting if you break even. Not bad, but you don't want to break even for 6 months. If you break even at least 3 months, 4 months, because you're starting out or things are not going well, but break even at least means you can cover all your costs. You can cover your fixed costs, your variable costs. But I always say to people, can you please also cover your salary? Don't say I'm breaking even, but you are not paid. That's not breaking even. You need to be able to still pay yourself, because that's a cost to your business. The business must pay you. So when you're breaking even, don't say I'm breaking even, but I didn't pay myself. It doesn't work like that. That includes your salary when you're saying you break even. So the break even point is the level of production at which the cost of production equals the revenues for a product. Okay? I know a lot of questions are going to come on this one. It's an exciting one. So guys, please just remember, I think all of you that I coached this week, I was telling them, please pay yourselves a salary. And can I tell you, some people are paying them a salary, but they say, no, I paid school fees, I bought food. I'm like, but where did you get the money? From the business account. So why didn't you just pay yourself that amount? So it's a very interesting concept. Darren, I don't know what you think about, because you are an entrepreneur. Because when you're breaking even, have you paid yourself? Maybe I can ask you, Darren, because you also run a business.
Yeah, I think your words are hitting home today, because as entrepreneurs, so often we put ourselves last and we don't factor in our salary as a part of that break even. And so literally when you said that, I realized, I've actually been very guilty of that. And so very important. But I think it also comes down to what we spoke about in webinar 2, where we spoke about separating business and personal finance. And so I think once again, this is something that's been reiterated so many times throughout the program, is that as the business owner, you have to factor in payment for yourself as well. Yeah.
And I think, I'm me as an entrepreneur too, I've made that mistake a couple of times. And I think that's why I always remember to remind people, but I always just maybe go back to a bank statement also for the month and look at it, and say, oh, okay, I use this for personal use, and just mark that and then add it together and say, okay, maybe these are my needs. maybe this is supposed to be my budget then. Unless there's wasters there, you can also maybe look at the wasters, because I've realized something: when you are recording and you budget, you start feeling that there's that guilt thing, like, yo, I can't do this. So if you're going out every weekend, you have to cut it, because you realize that, okay, so I'm spending another 1,000 rand that I don't have to, that I can take back into my business, or maybe take as my salary. So that's what I'm saying. As long as you're still using that money from your business, that's a salary. It's just that you're not doing it formal and you're not being consistent. So I always say, maybe, I think most of the guys will vouch for me. I was telling them, I say, okay, why don't you pay yourself on the 15th? Because maybe it's the right date, or pay yourself on the 20th or the 25th, but pay yourself the same amount and be consistent for 6 months. Because let's talk about this, Darren. Remember, even when you want funding in the future, the funder doesn't only look at your business, they also look at you as a person. So are you consistent? Are you credit worthy? So we need to also get our entrepreneurs there, because we're struggling. We say we want to be funding ready, but then we don't clean our own house. So you as a person need to be able to, if you want to apply for credit, you are credit worthy. So those are also other things that we need to think about, because a lot of other people have tried to apply for funding, but because they're not paying themselves a salary, they're like, okay, so how are you going to pay us? You can't even pay yourself a salary. So it's not only the business that you need to take care of. You also need to take care of your credit as a person, so that you can access overdraft, credit cards, because there is some good credit that can actually increase your credit rating. Yeah. So I think that's very important, guys.
Beautiful.
So break-even point, the value of sales you must make in a period in order to break even. So your break-even sales are equal to your indirect cost divided by your GP percentage, your gross profit percentage, where indirect costs are for the same period as the calculated sales. So your break-even sales are equal to your indirect cost divided by your gross profit percentage. So they say it is often easier to use the decimal value for the gross profit percentage. So I think what we're gonna do, it would be nice if when we're doing the coaching, because businesses are different, it would be nice to sit one-on-one with you guys. Then we work out on if you are breaking even, or what is your gross profit. I think it's gonna be easier, because businesses are different. So it's usually difficult to make examples for people, and then when they're in a different industry, it doesn't make sense for them. So I think the next sessions that we're gonna deal a lot with these aspects of the business. Yeah.
I like some of the messages that have come through in the chat. Here's one from Nelly Siwe saying, thank you for using the shoes example for this exercise. I haven't been costing correctly and not even adding tax to my calculations. This will definitely be helpful. Thank you for sharing that. Mbali says, I still struggle with costing. Hopefully you're going to be getting some more insight out of today's session, Mbali. And then somebody else was saying, even electricity used by the machine for making shoes, very important as well to take into account. So I think the lesson is really hitting home today. Thank you guys for keep those comments coming. While you are typing any further questions or comments in the chat, I think at this point, let's get the first quiz up. So team, if you can put up the quiz will pop up on your screen right now. And there are 6 questions in today's quiz. And so please make sure that you've answered all 6 of them. Scroll all the way down to the bottom. They are multiple choice, so choose one answer per question and then click submit.
Also, I wanted to just reiterate something. I hear people say, when I ask them about the indirect cost, and I said, okay, so are you is your business paying electricity? And then people say, but I'm running my business from my parents' house. So the parents are paying electricity and paying your business electricity. So guys, let your business pay the rent. Let your business pay the electricity. Start learning while you're still at home, because somebody else is paying for this business. It's not for free. So make sure that your business, if your household electricity is probably 450 a month, at least your business can pay 100 rand of that, because you're using your home electricity. So let's think for the people also that we live with, that our businesses are not a nuisance, So I think, but also it's just a matter of habit that you practice to pay for these things.
Very good advice. Very good advice there.
Yeah, I see also, Lisibana, you're asking what is the right percentage on markup. There is no right percentage. You need to first look at your direct and indirect costs, then you can come up with that percentage. All right, that percentage must be able to cover all your costs. So you can't thumb suck it and estimate it. Yeah, but usually it's advisable if you are retail, you're selling, you're buying and selling. I think, yeah, I know I've done 45 to 65% because of the rental that I used to pay. No, it was because of my rent. So that's why you find that when you go to malls, things are more expensive than when you buy it from a small shop. It's because of their cost. So we're actually paying the rent. You'd be paying my rent. So I'm saying, you know, but still you can't thumb suck it. Yeah. And then when people are making stuff, they're producing stuff, they're manufacturing stuff, they usually put more than 100% because it's their time, it's, you know, it's labor, there's a lot of things involved. So if you're making something and it's 85 rand, you can sell it for 160 or 170 rand, you know? So yeah, so that's how things work. Yeah, but still you mustn't just estimate or thumb suck. Work on the cost and be sure that it's gonna cover you. Yeah. Great.
Looks like the quiz has got quite a few people sweating today. Still quite a number of you need to complete it. So I'm going to keep it open for a few more seconds. Nelly's was saying, the quiz made me nervous. So yeah. Here's a comment by Pauline saying, I find that when I go to my printing service providers, they charge me for VAT. I would like to know, should I also register for VAT so that I can charge my clients? We're going to get that question answered a little bit later by Mr. Mokoka for you.
Yeah.
Someone else saying that quiz showed me flames. Yeah, that's because...
Sorry, guys. Remember, you don't have to get 100%. We're not looking at marks here. No, we just want to see if you understand. So it's not an exam, guys. It's just a quiz.
And I think, again, it's one of those things that is so important as a business owner. You have to get comfortable with the numbers. You have to get comfortable with being able to talk about the numbers, being able to do the numbers and to reflect on your business. You remember Mike said previously, if you can't measure it, you can't manage it.
Yeah.
Okay. Great stuff. All right, without further delay, we are going to switch gears and we are going to have our entrepreneur interview today. And so it is my absolute pleasure to welcome our first guest. Her name is Esther Mtweni, and she is the founder and director of Ubuhle Obunethabo Catering Services based in Cosmos City. She is a chef by profession and her passion is baking. She has qualifications in proficiency skills in food preparation and cookery. She's participated in various programs like the Enterprise Development Program in Professional Cookery and the Financial Literacy and Micro Enterprise Program. Ubuhle Obunethabo Catering Services is a bakery and catering company that was established in 2017, specializing in baking events beyond baking, catering, and decorations. The company also provides short courses in baking. Esther, thank you so much for joining us. You are looking beautiful. Welcome to the webinar today.
Thank you so very much. I'm pleased to be part of this seminar.
I'm going to take my screen down so that we can see you nice, big and bold on screen. And tell us a little bit about who is Esther. Tell us a little bit about your business and what inspired you to start your business.
Okay, my name is Esther Mtweni, the founder and the director of Ubuhle Obunethabo Catering. I was born in Witbank, and my place of staying is at Denaton, but then I moved to Joburg due to work. When I started this company, at first I was working at the canteen, where I realized that the work that I was doing was too much, and the money that I was paid, the salary that I was getting, is actually the money that I can do per day. So I decided that no, I'll quit the job and then start my own company.
Wow, that is a big step. Well done for taking that big leap. Esther, so tell us, how did you manage your finances when you first started?
My finances were very bad. I didn't understand a single thing with the gross profit, the net profit, and the cost of payments, the cost of the thing that I'm going to use for my cakes. Yeah, so it was very poor.
Okay, and do you now understand the difference between those different profits, gross profit, net profit? And how did you get to the point where you understood it now?
Now I understood it through the coaching sessions that I got with Flame. Because now I understand that I have to calculate all the indirect costs, because I wasn't calculating my indirect costs, especially me. I'm using also the thing. I'm selling the edible prints. So with the edible prints, someone will send me a picture of a cake with a print, so that I must print that thing for her or him to find out that he didn't send the direct picture that I have to just print. So I have to go and download the picture, and I was not calculating that data that I'm going to use. At times, find out that the picture that she or he wants is not the same picture that is going to use on the cake. I have to go doing the downloads, and then find out that now I get a notice that you have used 80 megabytes of your data. It's gone, and it's not being paid. Yeah.
Wow, that's a real example. Oh my goodness. Okay, so talk to us a little bit more about your experience in the Flame program. What was that like for you? And how did it empower you as a business owner?
Oh, it was a long journey in Flame. We started it as a big numbers, but others have quit because of this thing of numbers, because they are cracking their head, the numbers. It cracked their heads, but yeah, now I'm glad that I know how to cost my cake from the per receipt, because I know that if I'm charging a vanilla cake, it's this much from the costing or until I make the product that is finished. And even the chocolate is not the same price because I'm not using the same ingredients. So now I understand how the costing should go.
Nice. So if you think back to where you started and where you are now, what are you doing differently to make your business a success?
Oh, it's simple, the recording thing. I'm recording now, because everything that is coming in, I know how much is coming in, how much is going out, how much I'm getting. And what is nice now is that I'm getting a salary every month.
Beautiful, beautiful. So before we let you go, Esther, tell us what is your words of advice to entrepreneurs that are on the webinar today? Somebody who might be still very early on in their entrepreneurial journey. What would you say to them?
I'll tell them that they must understand their product, how much is costing, and how much is going to give them back the money, the profit, and how much they're going to survive on that product. Because you cannot sell a product that you don't know how much it's going to cost and how much you're going to gain on that product.
Beautiful, beautiful. Thank you so much, Esther. Great chatting to you. I think your story is so inspiring. And we wish you great success with your business.
Thank you.
That was Esther M20, the founder of Ubuhle Obunethabo Catering Services. Thank you for joining us. Please don't leave. I'm sure we might have some questions for you towards the end. But for now, we're going to move on and we are going to speak to Mr. Mike Mokoka again. What a privilege to have you. You've really, really been so generous with all of your information over the last couple of webinars. And it's again our pleasure to welcome you back, Mr. Mokoka. Thank you for joining us.
Thank you again, Darren. And it's a privilege to join you.
Okay, so let's kick off with when we talk about, I know we've been doing a lot of calculations. So what does the fall in gross profit margin suggest? I think that's the first question we'd like to start with.
Yes, thanks, Darren. Thanks, and it all shows that how to measure it. As I've said in the beginning, that if you cannot measure it, you cannot manage it. So the fall in the cost in the gross profit, it shows that maybe you are increasing your cost or your output. You see, whenever you increase output in everything, that's when goes that with the law of the marginal return, that when you increase, the cost will also increase, you see, if you increase output. So sometimes it shows that maybe you are not managing your expenses better, or you are not managing your expenses better, or maybe you are putting more input and then but the efficiency, your rate of that thing, or maybe your margin, your profit margin is very low, you see. So if your expenses goes high, then your profit will also decrease, your gross profit.
Okay, and then why might gross profit margins go up?
Your gross profit margin goes up. There are other factors. It's either maybe you're managing your business better, but most of the time entrepreneurs fall into this trap of try just to increase the price in order to have a higher gross profit margin, of which to me it's not the right thing always, because we use the gross profit by it. Sometimes there are many strategic intent that we must have. Why do I need a certain gross profit margin? Sometimes it's better to have a small gross profit margin, but what will be your strategic intent? You are trying to capture the market. You are trying to be competitive. is bad when you do. You know, the costing is a very tricky thing. When you do it, it's only about the paper. You must also have scanned your environment, your market, where you operate, your competitors. You must also check what are the competitors charging. And then from there, you must try to bring efficiency, cut costs, so that you can have a margin and still be competitive. So that is it. So the higher gross profit margin cannot, sometimes on paper, can be your downfall. Sometimes can be your success, depending if you improve efficiency. First of all, try to perfect what you are doing, and then efficiency will be high. Then you start to cut your expenses, and then your gross profit margin will grow.
I think that was so eye-opening already, where you spoke about how the strategy also comes into play, because if you're trying to capture the market, you could actually for a period sacrifice that profit just to be able to get more customers. I think that's what I'm hearing you say there. Is that correct?
Yes.
Okay, so why does the net profit or what exactly does that net profit margin tell us when we now talk about net profit?
The net profit margin specifically is after you have put all your costs, indirect and direct costs, and then that shows that how much that from your operation is your net profit. And it gives you where now you have to go back and check that where are my leakages to increase this net profit margin. So it's your profit that after paying all and everything, sometimes it's before tax, after paying all and everything, this is what I'm left on. And it's where you have to make yourself, you have to make a decision. Will I survive with this? Will the business go forward? It's your measurement. But you must be honest. In business, always I say to people that don't try to cheat yourself, because you're only cheating yourself by hiding other costs. You see, like not paying yourself a salary, but you still use the money from the business, as Chef said, you are able to pay school fees, you are able to put petrol on your car and all those things, but you are not calculating it as an expense. So it shows like your profit is much better. And in essence, that is not your profit. You have high expenses.
Wow. Okay, so let's talk about break even now, right? Is it good for a business to break even, and what exactly does it mean? So maybe you can elaborate for us on break even.
The break even point of a business is where actually you are neither making a loss or you are making a profit. So it's at that place. First thing when you go into business, that is your first thing that you want to achieve, especially where you are in a manufacturing, when you have to create a product like a shoe business that Portia was talking about. So that is where costing is more complex, because you have production cost. You see, so that is when you have to balance those your production cost with what revenue that will come in after your sales, and then you see that okay, now I've at least every business when it started, in most cases in production, it will go a little bit into a loss, and doesn't mean that you are bad. It's because you have a lot of a startup cost, which some of them will call them sunk cost, that you will never even recover. You understand? But you come to a point there where you come to a break-even point. That must be your thing. If you get there, then you are at the point, you are at the break or the make of the business. Then now you must start to bring in efficiency in your business in order to get a profit and net profit that you'll make out of that thing, that you say that from there, now I'm starting to be profitable in the business.
Makes sense. Okay, so now let's get to the question around VAT. Because I know often that so many entrepreneurs, and especially small businesses, have the question, what is the use of registering for VAT in our businesses? And that's actually a question that came through from Tebogo. So what is the point of registering for VAT? Should small businesses register for VAT? How does it benefit the business?
Yes, registering for VAT is a requirement from SARS. It's one of the taxes that unfortunately all of us pay, no matter you work or you don't work. It's one of the tax that we all pay. But VAT, people look at VAT as if it's not really a profit. Once you register for a VAT, remember that in the VAT, you've got two sides of the thing. You've got input VAT, you've got output VAT. So VAT, don't confuse that because I'm registering for a VAT. Don't fall in the trap that I'll be able to claim every VAT that I pay back. Because if you would register for a VAT, you must also, whatever you have paid, you have used, which we call that is a VAT, input VAT. When you buy something, you pay VAT. Then as a registered VAT payer, then you keep it. And then when you invoice people, when the money is coming in, your income plus VAT, that VAT you have to pay back. So between the input and the output, you must calculate and say that, okay, this is the VAT that I need to pay over to SARS, or this is the VAT. And paying over is a good indicator. You see, pay over to SARS, it shows that it's a good indicator. Other people say that, but why I'm not getting my VAT back? You understand? You will only get your VAT back if you are making a loss, if your costs are more than your income. So if your income is more than your cost, then you will have to pay a portion back to SARS. That means that you are profitable. So you must be worried if you get a claim back, that what happened now, you see. But yes, you'll get a claim back, like maybe if you buy an asset, sometimes it shows that, okay, you must analyze your books that, okay, I'm getting that back is because, oh, this month I bought a bakery, an oven, which is so much I've invested in the business. So I'm getting that VAT back because of capital expenditure, a VAT on the capital, you see. So it's a thing. It's good to register for a VAT, it's good, but what the law says is that if your business for the 12 months is gonna be, your net income is gonna be $1 million, then you have to register for a VAT. But you can also register voluntarily if you foresee that your income for the next coming month is for 12 months is going to be 50,000. You can voluntarily register. So if you are less than $1 million, your turnover is less than $1 million. You've got to decide whether I want to register for a VAT, but don't go into it for the sake that, oh, I'll lose on claiming VAT. No, that is a wrong approach altogether.
Gotcha. There's a question that's come through saying, Mr. Mokoka, how many types of taxes does a business have to pay?
It depends on the type of business that there are many. There's an income tax, there's a payee. If you've got employee, income tax is when after you have made your books, and then that is the basic one. You have made your books. Then you say that this is my profit, and then there is a certain percentage that we have to pay as a corporate income tax on it. There is a VAT that there is a tax that you also have to pay. If you do your salaries and whatever, you have to pay as you earn. You have to deduct. It's a statutory requirement that you have. But whoever you are paying, if it meets the tax payee threshold, you have to deduct that money and pay over. It's not yours and paid over to SARS. Then there is a VAT that is all about what you buy and what you get. The difference is whether you claim it or what you pay over. You see. And then there is what we call I think capital gain tax. And then there are so many taxes, but for you, as an entrepreneur, you have to look at. But there are others like when you pay over dividend tax, and all those are at the other level. But those are the basic that we have to pay. Gotcha. KE, income tax, and VAT.
Yeah, let's not complicate it with all the others for now. Already, I know some heads are spinning with all the figures. Okay, so if there are any other questions for Mr. Mokoka, please type it in the chat. We're gonna keep it open for another minute or two and see if there are any other questions, particularly relating to today's webinar content, profit margins, gross profit, net profit, break even, or even VAT. Any of those topics. If you've got any questions, you can please feel free to type them in the chat right now. Porshak, can we get you back on screen as well? I just want to see if there's any other questions that have come through. Mbali says, yo, I've been doing everything in the wrong way. Yeah, ne?
Yeah, all of us.
Portia, did you have any other questions that we needed to touch on for Mr. Mokoka?
No, I think I'm fine. But I think the guys can still have questions. Maybe if we've got a little bit of time at the end, maybe Mr. Mokoka can answer those. Yeah.
Okay. Thank you so much, Mr. Mokoka. Please stay with us. I'm sure towards the end, we might have a couple more questions for you.
Thank you.
Okay, so now we're going to move to our group activity. So today it's not really a case study, but it's just like to test our financial or numeracy skills today. So we're just going to break away, as always, in our syndicate groups. It's going to take 15 minutes, and then you'd have to answer 10 questions and explain how you got your answer. So if maybe the 15 minutes is done, your time is gone. You don't have to finish the whole quiz. You can finish it as homework, but don't feel pressured to do the 10 questions. If you're able to do 5, do 5. If the time is done, it's okay. Just come back and give feedback on the answers that you got. And then you can take that as homework and then submit.
Oh yeah, my name is Stefan Munyetani and I'll be representing Group 1. We've done the questions from 1 until number 6, whereas we are having challenges with the 7th one.
Oh,
the 7th question, yeah. For exercise 1, we got the selling price as 323 Rand 98 cent. So what we did is to calculate the selling price, we added the cost price and the markup, of which the cost price was 179 Rand 799, and then we added the markup of 80%. That's how we got the answer 323 Rand 98. And the second one of the chocolate, we got the selling price of 31 Rand 6 cent. We also applied the same formula of the first one. For question exercise 3, the rest was sold for 19 Rand with the markup of 175%. For a selling price, we got 52 Rand 25 cents. Yeah, using the very same formula of a selling price is equal to cost price plus the markup. That the third question was also followed up by the jar of coffee for 59 Rand 65 cents, and the selling markup was 25%. Yeah, so we got the selling price of 84 Rand 65 cents.
How much? 74.
Sorry?
It was what? 74. What was
84,
the answer?
84 Rand 65 cents.
Okay.
And then for exercise for the one over meat, where the meat is 30 Rand and the markup is 80%.
Yeah.
Here we were looking for the rand value profit.
Yeah.
So this is how I tackled it, how we tackled it actually. We wanted the selling price, and then to get the rand value, we deducted the
30 Rand.
The cost price, the cost price from the selling price, of which our selling price was 54 Rand.
Yeah.
And then to get the rand value, we got 24 Rand.
Yeah, that's correct. Yeah.
So the fifth one, the chocolate was for 8 Rand and the markup was 75%. I also applied the same calculation where we got the selling price, 14 Rand, and then the rand value profit was 6 Rand.
Yeah, correct.
The sixth one, it was just Kete for 29 Rand, selling it with a 90% markup. So the selling price was 51 Rand 10 cent, and the value profit was 26 Rand 10 cent.
Yes.
So The seventh one, we were looking for the cost price. We were still working on the one.
Okay.
So we were having some debating, of which the cost price we got was 40 rand, and then Lisibana try to explain something I did not get it quite well. So Lisibana will help me on this one. Lisibana, dog. Lisibana, where are you, dog? Help me out.
Teamwork, Lisibana.
Yes, guys. I'm here. We didn't get the answer because we were saying
we're still having doubts though.
We're still debating it because we say some were saying 40 rand is the cost price, and then 50 rand would be the markup, 50%, sorry. And then when we say 50% is the markup, then it gives you 20 rands or 40 rands, of which is 60 rands, not 80 rands. But if it's 40 rand cost, and then you take 40 rands, you say 100% of that, it gives you another 40 rands, and then it takes you to 80 rands. Then that's where that's what we're debating about. That was our stumbling block. We didn't actually get that one well. I'm still trying to figure it out. I'm still struggling myself here.
Yeah. So you'll have a chance. All of you must go try that and work it out.
Yeah, we shall.
Okay.
Yeah. Because I think the 80 rand already has the markup on it. Ne?
Yeah.
Yeah, it's the selling price. Yeah. So just work on it. Yeah.
Cool, no problem. That's all from us.
Yeah, thank you guys. You did very well. Hey, Tabiso already gave you the answer, Tabiso. Tabiso, don't give people answers. We're still going to give feedback. Okay, great, guys. I like that. At least we can see that you've got numerous skills, and I like how you explained it, Tipo. Very well explained, yeah. And then you guys can just complete everything that you've not done as yet. All right. Okay, let's move to room 2.
Hello, ladies and gentlemen.
Hi, Carol.
Can Paulina help me with the questions so that I can give answers? Paulina?
Okay. Hi.
Hi, Paulina.
What was the first question?
Okay, just give me a second. I'll maybe open it first. Okay, the first question was, you bought a comfort pillow for 179 rand and want to sell it with an 80% markup. What would you sell it for?
Okay, the answer for that, we already have the cost of sales. And we already have the markup, which is 80%. So the selling price, to calculate the selling price for the product, we're going to say 179.90 rand multiply by 180 divide by 100, because we have already included the 80% markup. Then the answer is going to be 323.98 rand.
Okay. Second question.
Correct.
Second question.
You bought a chocolate for 17.75 rand and want to sell it with a 75% markup. What would you sell it for?
We are going to use the very same formula we used on the first question, which is 17.75 rand multiplied by 175 divided by 100, which is going to give us 31.06 rand.
For a chocolate, it's expensive. But your answer is right.
It's one of those, those ones.
To pay the rent.
The ones we buy for Valentine's Day. Yeah.
Okay.
Yeah. Mm-hmm. Yeah. Okay. And you bought a dress for 19 rand and want to sell it with a 175% markup. What would you sell it for?
175 or 75%?
175. 175%.
Wow. I thought she said 75% because the calculation I did was for 75%.
Okay, let me jump in there. It's we said 19 rand times 175 divide by 100. It gave us 33 rand 25
32 rand 25 cents.
Okay, the next question. You bought a jar of coffee for 59 rand 65 and want to sell it with a 25% markup. What would you sell it for?
The answer will be 74 rand 56 cents.
Yes. And then the next one, you bought some meat for 30 rand and want to sell it with an 80% markup. What rand value profit would you make?
Okay, because here we want the profit value. We do not want the selling price. The calculations I did, I first calculated the selling price, which is 30 rand multiplied by 180 divided by 100, which is going to give me 54 rand. 54 rand is our selling price, but we want the profit, how much profit we made. So from 54 rand, we minus or we deduct 30 rand. The answer is going to be 24 rand.
Okay, the next question. You bought a chocolate for 8 rand and want to sell it with a 75% markup. What rand value profit would you make per chocolate?
We are going to use the very same formula used on the previous question. It's 8 rand multiplied by 175 divided by 100, which is going to give us 14 rand. And then from that 14 rand, we minus 8 rand. Our profit is going to be 6 rand.
Yeah.
Okay, the next one. You bought a skirt for 29 rand and want to sell it with a 90% markup. What rand value would you make per skirt?
If I heard the question correctly, I think we are still looking for the profit.
Rand value, yeah.
Yes. So the profit is going to be 26 rand 10 cents. How did we get 26 rand 10 cents? We said 29 rand multiplied by 190 divided by 100, which is going to give us 55 rand 10 cents. From that 55 rand 10 cents, we minus 29 rand, which give us 26 rand 10 cents.
Okay, next question. What if you know the sales price of an item but would like to know the cost price? In other words, you know the item is being sold for 80 rand and it had a 50% markup. How would you work out the cost price?
That one was a bit difficult because I forgot the formula. But the one Tabiso wrote on the chat, I think that is the formula, if I remember correctly, which is 80 rand, but he made a mistake by writing 40%.
Oh, 140, yes. So we said 80 rand times 100 divided by 150, which gave us 53 rand 33 cents.
Yeah.
Yes. Okay.
That's
and
correct,
then the last one, we didn't finish other questions. The last one. What if you know the item is being sold for 50 rand and it had an 80% markup? How would you work out the cost price? So we said 50 rand times 180 divided by 100, which gave us 27 rand 77 cents. Oh, did I do it right? No, it's 50 rand
78.
100
That you got it right.
by 180, which gave us 27 rand 77.
Okay. Correct. They say banyana, you're showing them flames, eh?
Thank you. That was all the questions we did.
Okay,
yeah,
great,
we were
guys.
just left with
Good. I think that was exercise 3 that I think you didn't do correctly, okay? The one where you say you bought a dress for 19 rand. I think you used 75 rand, 75%. I think that was a mistake. You were supposed to use the 175% marker. So that
Okay.
would have given you like the 52 rand 25. Yeah. I think it was just the number. Yeah. Yeah.
Okay.
Oh,
Yeah. All right.
Thank you.
So
Thank you.
there was room 2. Thank you guys. Yes, banyana.
all right, and that brings us to the end of today's session almost. Okay, just a couple of house announcements before we end of today's session. I think firstly, let me say I feel like it's been so informative. Well done to all of you for getting stuck into those calculations. And again, if there's anything that you take away from the webinar, remember the words of Mr. Mokoka, who says, if you can't measure it, you can't manage it. And that is why it's so important for us as business owners to be able to understand how to do these numbers so that we're able to really, really build businesses that can serve us and our families and our economy. All right, so next webinar is on the 14th of October, all right? And the topic for that one is going to be credit management, savings and investments, mental health and finance, and then scams. All right, so very, very informative one. It's going to be worthwhile to be here, and so please make sure that you are here on the 14th of October.
Thank you guys. We'll see each other on the 14th of October. Yeah. And please guys, answer our calls and our messages as we're scheduling our coaching sessions. Please. Yeah. Goodbye. See you next time.
Okay, bye. Enjoy your heritage weekend. Bye.
We will. Bye, Ruth.
Bye.
Bye.